We've waited for months now, and the Federal Reserve has finally cut its benchmark interest rate, the first time since December. Central bankers opted for a quarter-point cut this time around. They're signaling more cuts are likely within this year and maybe even beyond. Let's bring in our 21 News at 5 financial expert, Chris Mediate, to break down the realities of how all this translates into our economy and our personal finances. Right. Great to have you with us.
Thank you. Thanks for having me.
So this is the first increase this year, or rate cut this year. President Trump's been pushing for the central bank to reduce borrowing costs to juice up economic growth. Meantime, the Fed chair said this decision was based on the weakening job market this time. He mentioned inflation as the first reason. So how would this help job seekers and employers?
So, well, again, this is a step in the right direction. So you mentioned earlier borrowing costs for employers and different things like that. So think about this. When we're trying to stimulate growth, it all starts with the employer, right? So again, when the employer is able to expand, able to borrow in order to expand, that means what? That means more job creation. So again, this was the first step in a very restrictive policy, Lindsay, that we have been seeing now. We've been waiting for this for over a year. So again, I think any little bit helps, and I think it's going to start putting the direction that's going to really show you that the Fed has a dual mandate policy. One's inflation and one's the job market. So they were a little uncomfortable with the unemployment market. So they stepped in. They felt like it was necessary to help at this point.
Let's talk credit cards, debt financing, loans. How does the interest rate cut help people or alter that?
Again, step in the right direction, okay? The unfortunate thing when we look at mortgages, they've been coming down. This has already been priced in. So a 25 basis point, everybody's been talking about it. The interest rate's not directly tied to this, remember that, but it's what it's based off of. It gets some kind of traction based off of what the Federal Reserve does. And so I think anything is going to be welcome. Average credit card rates over 20%. So again, anything that we start getting these rates down is going to start helping borrowers. So I think this is the start. If the Federal Reserve is serious and the majority gets what they wanted, which is 2 more rate cuts this year, again, I think all of this will be very good for the borrower, okay? Be good for homeowners that want to start refinancing. I think you'll start seeing a trend. So again, I think anything that we're seeing right now is positive.
And what about the interest rate decision? Would that influence everyday prices on goods, meaning your essentials, your groceries? Do you think that that's going to trickle down?
I mean, so let's just say this, right? They are noticing the consumer, and we did see the producer price index, right? So that actually went down, and the CPI has been running a little hot. That's what we're seeing. So again, I think this is the balance between inflation and jobs. So right now I don't know how much that's really going to help bring the prices down yet. We need to get inflation down, Lindsay. It's still running hotter than the Fed's target at 2%. That's what's really going to start helping drive prices down if we can start getting inflation down.
Do you think the housing market's going to see some shifting with buyers and sellers, because they did indicate more cuts could come in 2026? Yeah,
so they're predicting 1 cut. So again, I think what you're going to start to see is, and I think we've noticed this, right? There's been a little bit of a softer. It's been sort of more maybe we start to see a buyer's market. I think now as interest rates continue to come down, I think you're going to see that expand. I think that's been the whole job of the Federal Reserve is again they wanted to slow the housing market down. Right? That's because of the prices were out of control. So we're starting to get it come down. We're seeing the market come down. So everything is sort of falling in place. And I think it's going to start to be a benefit for those. I think you're going to start seeing a more advantage again for the buyers.
Could the tariff impacts throw a wrench in some of that plan? Is it possible? Or do you think that, okay.
Yes. Tariffs are still a big question. I think you heard Federal Chairman Powell. They're very worried about what the future tariffs are going to do. Here's the good news, right? I think right now we've noticed, I don't think they would have cut rates if they really felt it was that high.
All right, good to know. Chris, thanks for coming on as always, breaking it down for us. I think we're just so nosy how it's going to work. And people have been waiting for this for a while, so they're looking to make those big purchases. Thank you for being here.
You're welcome. Thank you for having me.